Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. With the Fed rate decision looming in the week ahead, we'll take a look at markets and the outlook for rate cuts. We'll be joined in a moment by Eric Sterner. He is the CIO at Apollon Wealth Management. But we begin in South Korea, where President Yeol was impeached over the weekend. For a closer look, I'm joined now by Sam Kim, Bloomberg EcoGov reporter. Sam joins us from the South Korean capital. Sam, thanks so much for taking the time to chat with us. Let me begin by just asking a very simple question. Who's in charge?
Right now, the Prime Minister, whose name is Han Duck-soo, is in charge, is officially now the acting president, meaning that while Yoon Yeol, the president, is suspended from power and awaiting a ruling by the Constitutional Court, is going to be basically ruling the country for now. But certainly, he's not an elected official. The Constitution gives him the power to rule on behalf of Yoon, but it's unlikely that he will push for policies that would move things very much forward. The status quo would be something that he would be more interested in.
So as I understand it, Sam, the Constitutional Court has 180 days to make its decision. Could it reinstate Yoon if it decided this impeachment move was invalid?
Well, nothing is guaranteed for sure. There's some chance that the court may decide to put him back into office. I mean, there are 6 judges right now on the Constitutional Court. It's supposed to be 9 people, actually, meaning there are 3 vacant seats. And the parliament has said that they're going to move very quickly to fill those 3 seats that are vacant right now. But even if the Constitutional Court has just 6 judges, they can still go ahead with a ruling. The question is, they need all of the 6 judges to agree with the motion that was passed on the weekend for impeachment. And if they have 9 judges, they will need at least 6 of those judges to agree with the motion. It's hard to tell what they're going to decide on, and that's something that everybody's waiting for. But in the previous case in 2017, when Park Geun-hye was impeached, they did decide, as far as I remember, unanimously to finalize the ouster of Park. But in a much earlier case, in I think 2004, the then President Yeol was actually put back into office by the Constitutional Court. So it's hard to tell right now what's going to happen.
Sam, let's assume for the moment that the Constitutional Court upholds this impeachment. Could the next president of South Korea come from the opposition?
That's what media polls suggest for now. Lee Jae-myung, who is the head of the main opposition Democratic Party and who is the very person who led all this campaign for impeachment of Yoon, is the person that is gathering, at least 30% or 40% in terms of approval ratings that have been conducted after the martial law command was issued by President Yoon Yeol. And the closest person that would be a challenge to him in terms of the media polls is a person named Han Dong-un, who is the party leader of the ruling party. Last time I checked, one media poll put him at 7%. So, there's a huge difference in terms of approval. So you could, safely argue that he would be the next person to lead South Korea if there's an election held.
What do we know about the volatility that there has been in markets in the wake of, first, Yoon's move to kind of declare martial law? That seemed to really rattle investor confidence pretty dramatically. And since that time, I think it was over the weekend, that the Bank of Korea actually stepped in to try to offer some reassurance.
Oh, yeah. Everything was quite dramatic in the hours right after the martial law command was issued. Within 2 hours of it happening, the Bank of Korea governor and the finance minister and some other top policymakers with financial policy gathered very quickly to announce that they would unleash what they called unlimited liquidity if necessary, meaning that they're going to do everything in their power to make sure the markets are going to maintain some stability. Despite that, what happened was the won just weakened to a level that was like the worst since the global financial crisis against the dollar. and the stock markets basically lost tens of billions of dollars in terms of value in the days following the martial law command. So it was pretty chaotic and confusing for many of the investors in South Korea. Ever since then, I think there's been some sense within the markets thinking that, it might be a little too volatile. They may have gone a little too far. And, after the impeachment motion was passed on the weekend, I think already this morning we're seeing the stock markets climbing back up a little bit, and the won getting some more stability, even though it remains elevated. So I think, what could happen going forward, barring further, unexpected events, there could be some more stability coming, in the way. Yeah.
Sam, before I let you go, can you offer me a little bit of insight into what the future may be for Yoon? Can he face criminal charges now?
There are investigation officials, including police and prosecutors, who are trying to summon Yoon so that they can question Yoon about what really happened, what led him to declare that martial law in the middle of a night. And they want to make sure that, they're going to get all the details before they can actually understand what happens. And, if the charge by the opposition that he committed treason is something valid, that's a very serious charge. So much so that in the Constitution, even though a president in South Korea is exempted from all kinds of criminal prosecution, if the president has committed treason or some kind of activity that would threaten national security, that is not something that the president is going to be exempted from. And that's the ground these prosecutors are pursuing the charges against him on, that makes them feel that they can actually go ahead with the investigation and try to basically question him in person. So that'll be something that will hound Yoon going forward, even as the Constitutional Court, makes its ruling and deliberates on the validity of the motion.
Sam, thank you so much for joining us and helping us understand the developments over the weekend in South Korea, where lawmakers voted to impeach President Yoon Suk-yeol. Bloomberg Sam Kim joining us on the Daybreak Asia podcast. Welcome back to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. The Fed policy meeting will be top of mind for investors here in the U.S. in the week ahead. Maybe it's fair to say even investors globally. Joining us now for a closer look is Eric Sterner. He is the Chief Investment Officer at Apollon Wealth Management. Eric, thanks for taking time to chat with us. I think it's fair to say that the market right now is basically expecting a quarter-point rate cut. The bigger question may be, where does the Fed go from here? Is inflation proving a little too stubborn, do you think, for the Fed to be kind of comfortable with what they laid out in terms of the planned trajectory for rate cuts at the last meeting?
Yeah, well, thanks for having me. And I agree with you. I think it's almost assured that we're going to get another 25 basis point cut on Wednesday. And the dot plot, I think that's where everyone's interested in, because the last dot plot in September, they were projecting for 100 basis points in cuts in 2025. And it's almost certainly going to be, that's going to be reduced. I'm guessing it's going to be 75 basis points because, like you said, the road to get inflation down to their target rate of 2%, it's going to be bumpy, and it's proven to be bumpy. I mean, just the last CPI report, we saw used car sales go up, and I think that's not surprise given the hurricanes and people, the buying cars after the destruction of the hurricanes, and even some of the food prices. But I think we are on track. We are the major source of the inflationary pressures from the labor market and the imbalance there. That's gone away because now we have better balance with the labor markets, and we're seeing great productivity, 2.2% in the third quarter. It's just going to take some time. And I think as Powell has hinted to us over the last few weeks, because the economy is doing so well, they don't need to be in a rush to cut so fast. So I think we're going to see one cut removed from the projected table in 2025.
So at the end of the week, we're going to get the Fed's preferred measure of underlying inflation, the PCE. The data also probably will show very solid consumer spending and income growth as well. When you look at the American consumer, what do you come away with?
It's a tale of two cities right there, because you have the higher end consumer who's doing very well. The U.S. consumer net worth is up almost 50% since 2019, thanks to a few things with the wage growth, the stock market 20 plus returns for the past 2 years, and real estate. But on the other hand, you have the lower end consumer who is hurt from the cost of living has obviously increased substantially. Well, it depends where you're looking, but up to 20-30%. And while inflation is cooling down, the cost of living is going to remain high. So I think overall, at the aggregate level, I think U.S. consumer spending, retail sales remains very healthy. But the lower end consumer is certainly struggling with this higher cost of living.
No doubt about that. We're going to get a data point on retail sales also this week for the month of November. It may be a little tricky for the Fed to try to anticipate the impact of what we're hearing from the incoming Trump administration in terms of economic policy. Tax cuts, obviously, a part of that story. But tariffs will likely be a part of that story as well. Is this something that you're expecting, or is your notion that the Trump administration is basically going to use tariffs as a negotiating strategy to try to work out some new trade deals, and they probably will not take effect in the way that maybe the market had been fearing? Is that a fair statement?
I think that's a very fair statement. I think Trump has thrown some very big tariff numbers out there, whether he was talking about the Russia and China and other emerging market countries potentially looking to create a new currency, and his threat to put 100% tariffs on those countries, or 25% on Canada and Mexico with to help on illegal immigration. But I think those are just negotiating tactics. I mean, back when Trump was in office, the highest the Chinese tariffs were at 25%. And Trump knows, I mean, back in his first term, as we all recall, he began so many of his speeches with, "Hey, how's your 401k doing?" Because he was taking credit for when the stock market was going up, and he considers that a big part of his scorecard. So I don't see Trump or this administration do anything to turn this bull market into a bear market. That's why I don't think. I think the term that I've heard repeatedly is we should take Trump seriously, but not literally. If he were to reignite inflation with some of these large tariffs, that's just going to increase the cost of living that much more, and it could turn this unified government into a divided government come midterms 2 years from now. So I think all those fears from investors with these numbers should just remember that Trump likes to make bold statements, but we should wait and see which of those statements result in policy change.
So in terms of an investment strategy, what is it leading you to do right now in terms of putting fresh money to work in markets?
Well, I remain optimistic on the U.S. economy, very optimistic. And I think small caps have a lot of runway to run here. Their valuations are much more attractive than large caps. A lot of tailwinds there with the Fed cutting rates. I mean, that asset class has been held back because it's very interest rate sensitive. So the Fed cutting rates, even though it'll be a bit more slow, is certainly helped those companies. And if we do, we know that almost certainly there will be some tariffs, and I'm sure there'll be some China or Europe potentially putting some tariffs on U.S. goods. So if the trade war does initiate, and I think we all know that, or are all betting that will happen, it's just to what degree. I mean, U.S. small caps, 90% of their revenue is from domestic, while large caps, it's 60% is domestic and 40% international. So small caps are going to be more insulated from this trade war. So that's why I think there's a lot of potential appreciation there. And the other good news on the small cap front is that earnings have been in a recession for many quarters now, but they're expected to produce positive earnings in this quarter, to the fourth quarter, as well as 2025. And in fact, their profit growth rate is expected to outpace large caps in the second half of next year. So while I still have exposure on the large cap side, I think there should be some rotation to some of these other sectors besides the Magnificent Seven. I think investors should really put some more focus in the small caps as well, because we could see some strong returns out of that asset class.
Well, I'm glad you mentioned the Mag 7. I've got a question for you when it comes to mega cap tech. I was looking at a piece in the Financial Times. An investment fund run by Blue Whale Capital has, according to the FT, reduced its stakes in a number of major tech firms. The FT kind of indicating that there's concern now about the cost of artificial intelligence. What do you make of the AI trade right now?
I think it still has room to run. I think that we are seeing that market rotation right now. But if we're going to see these geopolitical tensions increase or any threats to the economy, we saw it for the past 2 years. Investors flock to those Magnificent Seven companies because they're very high in quality. They have really strong balance sheets, of course, really strong earnings. So I think that there's always should be room in investors' portfolios for the Magnificent Seven. And I know there's questions as far as when AI investments are going to pay off and how companies are going to monetize it. But we're seeing those productivity gains, like I mentioned in the third quarter GDP report. I think we're going to see some more. So I think that it's still in the early innings of this AI revolution. And in my mind, investors should put more emphasis in other areas of the market, because we're going to see the earnings broaden out. But I think there's still plenty of good returns to come on the technology sector in 2025 and beyond.
Eric, thank you so much for making time to chat with us. Eric Sterner is the Chief Investment Officer at Apollon Wealth Management, joining us here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.